going to get a closer look at those retail sales numbers with retail analyst and portfolio manager David Abella of Rochdale Investment Management. He manages $2.9 billion, says to be cautious with the retail sector. David joins us now. Thank you so much for being with us.
Great to be here.
Caution you're urging here. Are we just talking about fickle teen consumers or something larger?
Well, it is something larger than that. I mean, retail sales in general were a touch disappointing. I wouldn't say they were as bad as maybe some of the headlines, and certainly the index was up today for most of the day in a down market. But consumers are definitely pulling back. There was pent-up demand that drove sales earlier in the year, and that's basically over. The economy's still stuck a little bit, so it's cautious.
What about, Ben Bernanke was saying we're going to see rising incomes and stronger consumer spending because of that. Is that just not panning out? It seems like the data points have been against it the last couple of days.
Well, generally speaking, there is signs of rising income, but savings are also increasing, and then you still have the component, the high unemployment rate, as well as sort of the underemployed, the larger measure of unemployment, around 16-17%. But actually, incomes are growing and savings are growing, and that would be good for consumer balance sheets. That would be a more positive signal for maybe next year and beyond.
But this is this weird dance we get into where the Treasury Secretary in his speech this week says, okay, everybody needs to save more. But then investors worry when we see flat consumption, lower retail spending. How do you square those two?
Yes, it's a fine line with the American consumer. In some ways, the American consumer drives the world economy by spending. On the other hand, if they spend too much, we get in a situation everyone's over-levered, and then we have credit crisis and all that. So it's a fine line. I think around 4 to 5% savings, though, is definitely sustainable where the consumer can do well.
It seems like the kids are spending all the money, too, because whenever we see weak retail sales, you still have the teen retailers doing well. Does it just seem that way to me, or do Abercrombie and Fitch and Aeropostale and what's the other one we were talking about, Hostetler, Huntington?
Hollister.
They always seem to do well, although today wasn't the best report for Aeropostale.
Right. Well, Hollister's part of Abercrombie & Fitch, and just in general, they battled their market share back and forth. And if you talk to some investors in teen retailers, they wouldn't be quite so happy. It was a terrible segment for the last couple of years. Actually, I think it's a pretty good leading indicator of where the economy's going.
So what happens when everybody goes back to school? I mean, we're getting there. We're at the point where people are supposed to start buying, right?
Well, back-to-school sales are always a pretty steady thing. The question is how much of it will be promotional. There were some sales. I mean, that was the big thing about July. They really probably took too much inventory on, had to cut sales prices quite a bit. So consumers are going in with that mentality. If I just wait it out, I can get like the 2-for-1 or get the extra 40% off of the already discounted price. That's not going to be good for margins.
Do you think the discount retailers are the best defensive place to be?
Well, I do. On the other hand, and this is on the flip side, it's almost like a barbell strategy. The higher end, Neiman Marcus is a private company, but 12% comps, 10% was the expectation. Nordstrom was pretty good. I like a name like Coach. But yes, I think Target and Walmart are still safe bets in a cautious
That's very interesting. The discounters and the high-end
And the high-end, you're sort of split.
Right.
Yeah. Barbell. I guess that's what we're talking about.
That makes perfect sense.
Yes, visually.
Hey, David, thanks so much for joining us. David Abella there from Rochdale Investment Management.